Hey everyone, welcome back to the channel. Today, we're diving into a topic that confuses a lot of people but also gets a ton of questions. Long-term investing versus day trading. Which one's better? Which one suits your personality? And most importantly, which one can actually help you build real wealth over time? If you've ever looked at the stock market and thought, should I just buy some shares and forget about them, or try to flip stocks every day for quick cash? Then this video is for you. We're going to break it down in simple, understandable terms. No jargon, no hype, just real talk. And trust me, by the end of this video, you'll have a clear idea of which path makes sense for you. So let's get started. What is long-term investing? We shall begin with long-term investing. Sounds simple, right? That's because it is. Basically, you select some stocks, bonds, ETFs, or mutual funds and keep them over the years, even decades. Imagine it as planting a tree. You have planted a sapling, watered it, and left it to grow. It would be ridiculous to turn it over every week to find out whether it is growing higher or not. You just allow it to go through its natural process. Eventually, it will produce fruit. The same goes for investing. You acquire great businesses, and you keep them when times are good and times are bad, and you leave the magic of compound interest to take the strain. This method is sworn by some of the most renowned investors in the world. Take Warren Buffett, for example. The vast majority of his wealth was built by acquiring high-quality companies and holding them for decades. His famous philosophy? Our favorite holding period is forever. It is the ultimate long-term plan at work. Most people underestimate the power of compounding. At first, growth seems slow. However, in years and decades, it begins to pile up. And then the money begins multiplying, and in no time, your money has increased exponentially. Another perk? Stress levels. Long-term investing is non-stressful. You are not attached to a screen every minute observing the market rise or fall. You do not have to be panicking each time the market is down. It is consistent, it is predictable, and as time goes on, it tends to pay off. And frankly, it is that gradual increase that suits individuals who do not want to waste their lives staring at the charts and being obsessed with every news piece. What is day trading? Now, let's flip the coin. Day trading, a completely different beast. Day trading simply involves selling and buying stocks on the same day. There are instances where trades occur within hours, occasionally in minutes or a few seconds. Think of it like a sprint. You are following little price flots and small gains here and there, and quitting the market before the market turns. It is in a hurry, aggressive, and demands attention at all times. Day traders observe charts, pattern searching, technical indicators, and make decisions in split seconds. Others earn their livelihoods by doing this. A few of them even become very successful. However, the majority of the day traders are losing money in the long run. It's a high risk, stressful. In fact, it is more akin to gambling than investment to the majority. And it's not just about money, it's mental exhaustion. Scared, greed, overconfidence, all that can smack you down unless you are disciplined. You must know how to control your emotions at any given moment. A single error can take away several victories. So yes, it's exciting. However, it is also dangerous, a pressurizing experience, and demands gravity, tactics, and experience to be successful all the time. Wondering the main differences between long-term investing and day trading? Okay, so let's break down the key differences. It is all about patience when it comes to long-term investing. You invest solid assets, keep them for years or decades, and allow them to grow. Day trading is a matter of speed. Buy, sell, make profits within hours or minutes, rinse, repeat. This is a brief comparison and contrast. Time horizon, years or decades versus minutes or hours. Risk, lower versus extremely high. Stress, calm versus extreme mental roller coaster. Skills required, patience, research, and discipline versus quick thinking, technical analysis, and nerves of steel. Rewards, long-term consistent growth versus short-term large profit, but large losses too. In case you would like a basic comparison, planting a tree would be the equivalent of long-term investing. Day trading, running a marathon at a maximum speed daily. They are both valid, though one of them is much more sustainable in the long term. Pros and cons. Let's get honest about the pros and cons. Long-term investing pros, less stressful. There is no need to monitor the market throughout the day. Proven successful in the past, the stock market has a historical payout of about 10% per annum on average. This reduces transactions and consequently lowers fees and taxes. Accumulates wealth steadily and consistently. Cons. Takes time to bear fruits, sometimes decades to realize huge returns. It is boring and not very exciting to see your investment grow gradually. You must remain collected when the market is down. Panic selling is your bane. Now, day trading pros, potential for quick profits. Thrilling, it is a daily challenge. Quick acquisition of knowledge of charts, patterns, and market behavior. Flexible, may be performed anywhere as long as one has access to the internet. Cons. High risk. There are a number of traders who lose money. Burnout is caused by intense, constant decision-making. Profits are abated by high transaction costs and taxes. Addictive, it can result in larger losses because of the pursuit of fast profits. Stress, greed, fear, all those are emotionally exhausting. So, which one is better? Honestly, it depends on you. Which fits your personality? Ask yourself some questions. Are you patient? Do you like to see investments increase gradually over the years? Are you able to remain composed in the market dips? If the answer is yes, then long-term investing is most likely the way you prefer to invest. If you are an adrenaline thriver, loves fast decisions, can you deal with risk and stress professionally? Day trading could be attractive to you, but do not forget that not everybody is able to be a day trader. To the majority, a combination is the best choice. Maintain a strong base of long-term investments. Assuming that you are curious and want to learn day trading, start with small amounts of money that you are fine to lose. Busting myths. Let's clear up some myths that float around about investing. Myth 1. Long-term investment will turn you into a millionaire overnight. Reality? Nope. It is all about long-term gradual development. Patience is the key. Myth 2. Day trading is a sure way of getting quick wealth. Facts. The day traders lose money. It is dangerous, and it is not always guaranteed to succeed. Myth 3. To invest, you have to be a genius. Reality, not at all. Education, discipline, and patience are of greater significance than IQ. Myth 4. You can't start small. Fact. Small investments become very huge after some time due to compounding. Real-life examples. Want some real examples? Warren Buffett has more than 70 years of investing experience. He had been purchasing good businesses, kept them for decades. That is a perfect example of long-term investing. Now, day trading. Others, such as Ross Camero, have made millions. But a large number of people have lost it all. Day trading is a roller coaster ride. It is a ride that, when on the uphill side, is thrilling, and when it goes down the hill, it's brutal and you may lose lots of money. Long-term investment is stable, consistent, and predictable. Day trading is dangerous, high-speed, and thrilling. Both are justified, and one of them is usually safer and more sustainable to the majority of people. Risk, time, and psychology. Let's talk about risk. Investing in the long run is risky, but time is your ally. Markets recover. Compounding softens volatility. The biggest risk is selling in times of decline. Day trading, immediate risk. A single trade can ruin the profits of several wins. It is essential to control your emotions. Fear, greed, and overconfidence can all destroy the success of a trader. Time is another factor. Investing for the long term is a flexible activity. Day trading demands a lot of concentration and vigilance almost all the time. Psychology matters. Day trading is risky if you are not able to control your emotions and feelings. For the long-term investors, patience and discipline are rewarded. What should you do? Best strategy is diversification. Store a majority of your cash in long-term investments like ETF and mutual funds. In case you feel like trying day trading, you can start with small trades, but with money that you are comfortable to lose. Do your homework, study the market, learn the strategies, and keep in mind, wealth is acquired not in days, but in years. That's the full breakdown. Long-term investing is like planting a tree. It requires patience and consistency. Day trading, on the other hand, is a sprint, fast-paced and high-risk. Which one is right for you? That is determined by your personality, goals, and risk tolerance. And in case you enjoyed this video, hit the like button and don't forget to subscribe. I would also like to know about you. Are you a long-term investor or a day trader? Write your thoughts, questions, or stories that might have happened to you in the comments below. I read all of them, and I like to hear how you're doing in your financial journey. Thanks so much for watching. Always keep in mind that the first steps towards smarter investing are always through education, patience, and consistency. Always continue learning and be disciplined, and I will see you in the next video.